Well, hello everyone. I'm going to do a quick losing trade recap on the pound yen. I took a small loss on the pound yen last week, and I just wanted to go over that trade. I was very sick last week. I had 105 temperature, but so this was really the only trade that I took last week, and it was just pretty much a quick in and out, in the sense, a losing trade, a quick losing trade. But I wanted to go over it because, it's a trade that, if it sets up every day, then, I would take it every day because it's just, it had everything there. It seemed like it had a lot of potential. But in this game, it's just about probabilities, and I've gotten to the point in my trading career that I know when to take one on the chin, and call it quits, and I know when it's time to reevaluate, and this is a perfect example of that. I'm super happy with how I, you know, even though I was when I took this trade, I wasn't as sick, but I was starting to feel pretty under the weather when this trade was setting up, and when I entered it. But you know, with all that aside, I'm very happy with how I managed it and the levels that I chose. So let's take a look at it. Obviously, if you go back and look at my old video, I'll put a link up here to it. You can see where I was talking about potentially entering, this trade around this area if it set up, and it did set up pretty perfectly. It just happened to be a losing trade. So let's go into it. Got our main kind of trend line here that was carrying price, that was broken and respected, and was kind of inching its way back up to a nice level that had a lot around it or within it. We had a nice little area of support and resistance that had held a few times, and within that little area, we had a nice little cluster of Fibonacci that I kind of mapped out here. So this little impulsive move here that kind of initiated the break of this zone here that I had, as well as that main trend line, originated kind of right here after this little last buyout push. So I fibbed that, and right there was the 61.8, which is kind of one of the main Fibonacci's that I use. If we take this little push up of buying, and then the retracement of that, which was 50%, the extension of this leg is the negative 23.6, which is kind of like a profit target that some people use. And then kind of the inverse fib of this, we had a 161.8 fib extension there, like that. So some people use this as like a ABCD pattern, profit target. So all that was lining up, right around, this little sweet part. So I really wanted to look for a potential trade opportunity here. So I dropped to the 1 hour chart, and that was my entry chart. I had a couple of little extra little trend lines here. I forget, I don't even remember which ones I used. I think I had some kind of little channel topper here, somewhere like that. Maybe something like that. I'm not too sure. I don't remember exactly, but I had kind of whittled it down, and I mentioned I was pretty sick, so um, I this was a limit order entry. I kind of settled on 144.15 was the limit order I had, um, and it worked out pretty nicely initially. You can see the kind of all the little cluster just kind of coming together right around in here. Um, got my entry was pretty much the top of the day, the high of the day, and I got about 20 to 25 pips off of it initially. Um, I didn't really have a target in mind. I just kind of risk one to make one initially before I kind of start adjusting my stops. But we never really got any follow through. It was just the bulls had completely taken over. But like I said, this is a trade I would take over and over again. And that's all that matters to me. It's not, I'm not pissed off that I lost. Just because, it's a trade that I've taken so many times and that has been so profitable. In this case, it just ended up being a loser. There are a couple little things here that, actually stimulated long entries for people. You can see an obvious, inverse head and shoulders pattern here. With the neckline being broken, that's kind of an automatic entry for people to go long. So there's so many different ways to trade. And at the end of the day, you just have to find something that's consistent for you. Let me go over the trade I actually took on Friday real quick. This was, let me jump out to the daily, because this was, I don't typically wait for any type of confirmation, but the fact that this thing had broke the highs and was at, was just trucking, had a lot of momentum behind it. I didn't want to just jump in front of that again, so I waited. So we got this little zone here that I had marked off. This is a daily chart. This was just a quick day trade in and out on Friday. I wasn't looking to ride a whole lot of downward movement just because we have broken the highs, and nothing's to say that this thing won't keep trucking. So we'll have to just kind of wait for some new market structure to form around here to see what happens. But anyways, I just had a couple little trend lines marked up here that I used that were all kind of intersecting around this low to high profit target, and then kind of that 161.8 of that impulse move here. That all kind of lined up around here. So this was actually a really lower time frame entry here. On the 4-hour you see a quick spike up, and then either profit taking or sellers emerging or whatever it was drove that candle down pretty substantially from where its high was. So once I saw that, I kind of dropped to a 1 hour and 15-minute chart. Sorry, my trend lines disappear. And that's how I kind of entered, and this was my trade. Just a really quick day trade. I had a really tight stop on it just for obvious reasons. On the 15-minute chart, I just fibbed the high to the most little recent low there where we've kind of found our bottom. And noticed kind of right around this indecision point where buyers temporarily lost control was kind of a little equilibrium, order block, whatever you want to call it, point. And right around there was like the little 61.8 fib retracement of that. So this was just kind of a purely structured trade. I had a really tight stop, just a little over 20 pips, which it was just essentially above this kind of little order block thing that I was seeing. Again, this is a 15-minute chart. I don't go any lower than 15 minutes really. Really, I don't go lower than hourly, but this was, like I said, a kind of a scalp day trade. Saw, you know, those levels kind of being respected a little bit, and so saw a temporary short position opportunity. Just took about 50 pips on it, so it was a little 2 to 1, and I didn't trail my stop at all. I just left it where it was at and took 50 pips off right as it kind of spiked down into this little interesting spot I saw on the 15-minute chart. We can see kind of a little minor support and resistance. Got a big bull candle came up, random little kind of indecision candle here that spiked down a couple times and found support before another push up. And also, you know, we had this little pause here, so that's kind of where I just wanted to get out. It was towards the, you know, middle of the day, towards the end of the day, so I didn't want to hold over the weekend. You know, there's been a lot of weird news coming out with North Korea and Japan, so you know, that actually caused, you know, a pretty substantial gap at the beginning of last week, I believe. But so I didn't want to hold over the weekend, you know, especially with how bullish GJ's been the past week. So quick 50 pips. Actually, it was let's see, 2% gain, because it was a little over 1 to 2. So this tiny little trade actually took care of that loss, which that was like a 65 pip loss, but I kind of finagle my position size accordingly to limit it to you know, 1%, 1 to 2%. So yeah, so it you know, this was kind of the only other trade, that similar type of setup on the dollar yen. So yeah, you know, I just really kind of wanted to review this because some people get scared to, you know, jump in front of the big bullish candles here. And you know, like I said, I'll put a link in the video, but you know, I caught this move here based off of similar types of confluence, you know, right here. So, and pretty much rode this all the way up over a couple of different trade entries. It was finally stopped out kind of up around these highs here. You know, that was over 1,000 pips between, I don't even remember, a few different positions I was able to enter. But so don't let big bullish candles scare you. If you know, if it's at levels that you expect to hold, go ahead and enter. You know, but you know, don't just blindly enter. You have to have reason for entry. And like I said, this is a trade that I would take, you know, every day, because it just has so much potential. And I just wanted to, I don't know, kind of reiterate that you just have to kind of find what works for you, or what you've proven to work, and just do the same thing, you know, every day, and look for the same setups, analyze the same, and don't let other people's opinions or, you know, bias or huge candles kind of scare you out of taking trades. If you've found it to be profitable over time, then you know, that's your job, just to take the trades. So let me know if this helps, and hope all is well.